Hello and welcome to the Budget Decoded series by HDFC Securities. I am Preksha Shah. Today we are unpacking the key macroeconomic announcements and personal finance measures from the Union Budget 25-26. Joining me today is Mr. Laxmikant Lokhande, DVP Investment Products at HDFC Securities, to shed light on how these budget initiatives can influence your investment strategies and personal finance planning. Mr. Lakshmikant, it's great to have you today. Let's dive right into it.
Thanks, Preksha, for having me.
Let's start with the big picture. The union budget lays down the economic roadmap for this year. So, what are the key macro parameters that investors should keep an eye on?
Yeah, so to start with, obviously the most important parameter to look out in the union budget is the nominal GDP growth. That's the most important macro parameter. So the nominal GDP growth for FY26 is estimated at 10.1%. Also, a day prior to budget, economic survey was released, wherein the real GDP growth for FY26 was expected in the range of 6.3 to 6.8%. Now, just a quick difference between real GDP and nominal GDP. So, real GDP growth is nothing but the growth adjusted for inflation, while your nominal GDP growth is calculated at current price levels. So, for an example, if your nominal GDP growth is say 10% and inflation rate is 4%, your real GDP growth will come out to 6%, that is 10% minus 4%. Also important parameter to look at it is the absolute level of nominal GDP, which for FY26 is expected at around 357 lakh crore. If we convert this figure into dollar terms at an exchange rate of 87 per dollar for INR, this figure translates to 4.1 trillion. And most of you would kind of relate to it because we had a near-term objective of reaching a $5 trillion economy. So for FY26, this number is around 4.1%. Obviously, it will be subject to change in the exchange rate. But at $87 per barrel, this number is 4.1 trillion. And we are gradually moving towards that $5 trillion economy target.
Got it. So, every budget is about balancing the books. Where is the government's revenue coming from this year and how is it being allocated across sectors? Any noticeable shifts in the spending priorities?
So, see, first of all, let's look at the overall budget size for FY26. So the total expenditure, or which is also called as total budget size, is 50.7 lakh crore, which is 14.2% of nominal GDP. Now, if we look at this figure of 14.2, this has dropped by 3.5% from 17.7% in FY21, which means that government has been consolidating the union budget over the past few years. On the revenue front, obviously the primary source of income for government is tax revenues. So the net tax revenue for center is around 28.4 lakh crore, which is a growth of 11% over FY25 revised estimates. If we look at the non-tax revenue, that account for 5.8 lakh crores, and this includes dividend from RBI, banks, financial institutions, PSUs, and some receipts from telecom sector. The third component of revenue is the capital receipts, which is in the form of disinvestment income and recovery of loans. Uh, Coming to the expenditure side, we have two broad components of expenditure. One is your revenue expenditure, and second is your capital expenditure. Now, revenue expenditure total for this particular FY26 budget was around 39.4 lakh crore, and capex was, or capital expenditure was 11.2 lakh crore. Now, the difference here is that capital expenditure means that any expenditure which creates any asset, whereas revenue expenditure does not create any asset while the spending is made. Essentially, you would have seen, or people would have read in the various forums that quality of spending is determined by the share of capex, because it has got a higher multiplier effect. And if you look at the capex growth for FY26, it was 10.1% over FY25 revised estimates. Just to see the major components of expenditure. So the interest expense accounts for overall 25% of the overall expenditure budget. Defense accounts for around 10% and subsidies accounts for 8%. So this is the broad breakup of how the revenues and expenditures in the union budget looks like.
Got it. So now coming to my next question, fiscal deficit. So it's always a hot topic in the budget discussions. The government has maintained its commitment to fiscal consolidation. So, how does this deficit figure compare to expectations, and what signals does this send to the investors?
So see, here if we just take a step back and see that during COVID period, our fiscal deficit, which is nothing but the difference of the government's expenditure and revenues, this rose to 9.2% of GDP in FY21. And obviously at that point of time, government support was critical to support the economy and people's livelihood. So they spent a large quantum of money, and because of that, the fiscal rose to 9.2% of GDP. However, since then, if we see year on year the budget commentary, the finance minister has been guiding the markets that they will bring down the fiscal deficit to below 4.5% of GDP, to below 4.5% of GDP by FY26. Now, if we look at the fiscal deficit figure for FY26, that is estimated at or budgeted at 4.4% of GDP, which is in line with the guidance given by the government as well as in line with the market expectation. Now, this reduction in fiscal deficit is positive for the fixed income market because it leads to lower borrowing in the domestic market, and it also paves the path for India's sovereign rating upgrade, which is currently at the lower end of the investment grade by global rating agencies. So a reduction in the debt levels, reduction in the fiscal deficit improves the prospects of India's sovereign rating upgrade, which is an essential parameter for investors, foreign investors, to bring in money into the Indian debt market. uh, Furthermore, for future, finance minister has guided that over a period fiscal deficit will be brought down in such a manner that government debt to GDP ratio reduces over a period of time. So fiscal deficit will become a indirect nomenclature, and more focus will be on reducing the debt to GDP ratio of the government over a period of time.
Got it. That's a great insight. Now, coming to tax buoyancy, it's a critical factor in revenue projections. So, with the reduction in tax rates, how is this government expecting to maintain revenue momentum? Do you see indirect tax collections playing a bigger role?
Okay, so first let's understand what is this tax buoyancy. So tax buoyancy is nothing but it's the rate of growth of taxes versus growth in the nominal GDP. Now, ideally, you would want tax buoyancy to be greater than one, meaning that the tax growth should be higher than the growth in the nominal GDP. Now, if you look at the figures of this particular budget, government has assumed tax growth to be higher at around 11% versus around 10% growth in nominal GDP. If we look at the indirect tax collection, which is the GST collections growth, that has also been considered at around 11%, which will compensate for the reduction in the direct taxes. Now we know that government has reduced taxes on the personal tax front, which will cost government 1 lakh crore rupees. However, if we see that government has curtailed the overall expenditure also, and the overall expenditure in this budget has been kept under check, which is also visible in the fiscal deficit. So if you just compare the fiscal deficit figure for FY25 revised estimates versus FY26 budgeted estimates, it is more or less same at around 15.7 lakh crore. So this control of fiscal deficit and overall expenditure will allow government to manage its fiscal despite cut in the tax rate, which will have repercussion of almost 1 lakh crore on the government revenues.
So, coming back to fiscal deficit, are we looking at any innovative funding measures introduced this time? How is it being funded?
So see, so the fiscal deficit for FY26 is budgeted at 4.4% of GDP, and in absolute terms, it comes out to 15.7 lakh crore. Uh, a large part, that is 75%, is being funded by government borrowings in the form of G-Secs and T-bills. Now, basically, government has been historically funding a major portion or the substantial portion of fiscal deficit through government borrowings. Weekly basis, there are GSEC auctions and TBL auctions through which government raise money to fund this fiscal deficit. So just to give few numbers on the gross borrowing numbers. So the gross borrowing number for government securities in FY26 is estimated at 14.8 lakh crore, and the net figure, which is adjusted for repayments, is around 11.5 lakh crore. In FY25, this borrowing figure was around, for the government securities, was around 14 lakh crore. So there is a jump of around 80,000 odd crores. this was slightly higher than the market expectations. However, we believe that this should be manageable given the foreign flows which are expected in the Indian debt market, and there is already a healthy domestic demand from the institutional and the other players in the market. So this figure of 14.8 lakh crore should not be a concern for the overall market from a funding perspective. Apart from that, the balance is funded by small saving scheme certificates and other receipts, which contributes to the overall funding of the fiscal deficit.
Got it. Now, shifting gears to personal finance, there's a big hot topic about the nil tax up to 12 lakhs. 12 lakhs.
Yeah,
So, this is under the new tax regime. Can you help
yeah.
us clarify how this new tax structure works for different income slabs?
Okay, so let me just take a moment to highlight what is the change which has been brought into the this particular new tax regime. So as we were expecting in our pre-budget session, and we discussed it in our pre-budget session that there could be tax swaps which could be announced for middle class to boost the consumption, and finance minister has kind of delivered on that front. So now the change which has come in is that under new tax regime, there will be no tax up to rupees 12 lakh annual income. This limit, by the way, has been enhanced from rupees 7 lakh from previous year. So in this particular budget, or from the next financial year onward, any individual who is earning up to 12 lakh rupees annual income, he will not pay any tax as against 7 lakh rupees earlier. For salaried individuals, this there is a standard deduction available for 75,000, which basically makes this annual income limit to 12.75 lakh annual income. And this change is primarily because of the tax rebate. Now let's just go through these numbers in detail. So if we look at a person or an individual earning less than 12 lakh and has opted for new regime. So suppose let's take an example of 10 lakh income. Given the tax brackets we have, which has been announced in the new tax regime, so up to 4 lakh rupees there is nil tax. For 4 to 8 lakh rupees, the tax bracket is 5%. For 8 to 12 lakh rupees, it is 10%, and for 12 to 16, 15%, going all the way up to 24 lakhs. And for greater than 24 lakh rupees annual income, the tax bracket is 30%. So it's a progressive tax system wherein with each slab the tax rate kind of increases. Now even though the tax income, so let's take the example of 10 lakh income, wherein as per this new tax regime and the proposed tax structure, the individual will be paying 40,000 in taxes. However, there is a rebate benefit available of 40,000. So this 40,000 gets subtracted from the actual tax liability, and the actual tax benefit after rebate becomes zero. So similarly, for a 12 lakh income, this figure is 60,000. The actual tax comes to 60,000, but there is an equivalent amount of rebate being provided, which is 60,000 rupees. So the tax after rebate benefit is zero. So in that sense, the most talked about point with respect to budget is that up to 12 lakh income, there is no tax. That is essentially because of this rebate benefit. So as per calculation, there will still be a tax, and there will be an equivalent amount of rebate, because of which there will be no taxation up to the 12 lakh annual income. Now, if we take the example of say higher tax or the higher income of say 20 lakhs, so the proposed tax comes out to 2 lakh rupees with respect to the proposed norms. If we compare it with the previous year, wherein the tax slabs were slightly lower, or the brackets were slightly lower for the respective taxation, that tax would have come to around 2.9 lakh rupees. So there is a absolute saving of 90,000 for a person who is earning 20 lakh annual income. For a 24 lakh and 50 lakh annual income, this figure jumps to 1.1 lakh rupees. So up to 12 lakh rupees, obviously there is no taxation impact, there is nil tax. However, given because the tax brackets have been kind of the slab wise, the limit has been enhanced, the people in the higher income tax bracket will also kind of benefit over here. And as per finance minister's press conference, this 12 lakh limit will kind of benefit 1 crore additional taxpayers who will pay nil taxation. So that's about the the taxation in the new tax regime for this 12 lakh income nil taxation, and the benefit available to people who still have higher income than 12 lakh rupees.
Great. I think that thoroughly explains the topic well to our viewers. However, what would this move mean for the people still adhering to the old regime?
So see, incrementally, since the launch of the new tax regime in FY 21, we have seen that all the key announcements are being announced through the new tax regime. And this year also we saw significant positive changes in terms of increasing exemption limits. So what it does, it makes new tax regime extremely attractive. And unless an individual has very high deduction in old regime, the new tax regime trumps over old regime. And with more and more individuals opting for new tax regime, the old regime will get automatically phased out. So the bar for people to opt for old regime, they need to have very high deduction levels, which incrementally will kind of reduce for most of the people, as more and more attractions are brought into new tax regime. So I believe that even if officially government does not allow announce the closure of the old regime, with more and more people opting for new tax regime, old regime will automatically get phased out over a period of time.
Got it. That's great. About the people earning more than 24 lakhs who are falling in the highest tax bracket. And there is also a set of people who have loans, have home loans versus those who don't have. What does it mean for them?
So yeah, so say obviously up to people earning up to 20 to 24 lakh annual income, they are benefiting in the range of 90,000 to 1.1 lakh in through this new tax changes. Say if somebody who is earning say 50 lakh income, that person also benefits by 1.1 lakh in this new tax regime. Now, if this same person opts for old tax regime, and as you talked about somebody who is having a loan or other deductions like ATC is available, HRA is available. What it does is, because the tax rates in the new tax regime are so favorable with the increased exemption limits, the bar for deduction becomes way too high in the old tax regime. So even for somebody who is earning in a higher tax bracket, they need to have very high deductions, which because and in the various deduction there are caps available. So even at the higher tax brackets, it may make sense for most of the people to go for new tax regime, until and unless people are having very specific and opting for all the deductions. Then obviously the old tax regime may be slightly beneficial. But for all the practical purposes and for most of the basic exemptions and deductions available, the new tax regime favors the old tax regime. And that's how the changes have been made by the government as well, because they are looking into all these deductions while redefining the limits for the new tax regime. So at the even at the higher tax salaries and the higher income levels, even the new tax regime becomes more and more favorable going forward.
Got it. Great. And what would this mean for the people still adhering to the old tax regime?
So people adhering to old tax regime, obviously, depending on their tax deductions or whatever deductions they are claiming, it's an individual assessment whether how much they are saving, and through various tax calculations, one can calculate the difference. But as I said, the bar for deduction is way too high in the old two regime. So like for somebody like a 25 lakh annual income, the deductions has to be as high as 7 to 8 lakh rupees for it to be at par with new tax regime. And typically people who are earning say 25-30 lakhs, they would not have this kind of deduction, because probably they will not utilize their ATC limit fully, or they will not utilize their other limits to a full extent. So to that extent, it's more of an individual assessment, this thing. But the broader picture we need to understand is that given this exemption limits being raised, or the tax slabs have been made so favorable in new tax regime, for most of the people it turns out that the new regime becomes favorable as compared to old regime. People who have deductions, having said that, people who have deductions in the available in the old tax regime, they would continue. But I think it's a matter of time that their for them also the new tax regime becomes more favorable, and they eventually opt out of old tax regime to new tax regime.
Got it. That makes sense. So now coming to the most exciting announcements, the allocation of 10,000 crores for a new fund of funds aimed at supporting startups. So this
Yeah.
initiative, I think, is designed to prove the much needed capital for emerging businesses What are your
Yes.
thoughts on how this will influence the startup ecosystem in India?
Yeah. So, in fact, Finance Minister did announce in her budget that, through AIFs for startups, they have received, commitments of almost 91,000 crores. Basically, the AIFs for startups have received commitments of more than 91,000 crores so far. And these were supported through fund of fund structure, and government had contributed 10,000 crore rupees. So to continue this, what government is now saying that there will be a fresh contribution of 10,000 crore on such platforms. And with this, what it will do is, it will further encourage the entrepreneurship in the Indian business ecosystem. And with such government initiatives, more and more people will be encouraged to go through a startup mode and contribute to the Indian economy. In addition to that, government has also announced a credit guarantee scheme enhancement. And for startups, now that limit is raised from 10 crore to 20 crore, and the guarantee fee is also moderated to 1% of the loan amount. And this is applicable for around 27 focus sectors. And it is also proposed that so there is a benefit under section 80 ISE available for startups, wherein they get tax benefits for initial years when they start their businesses. And this period also has been enhanced for another 5 years. So basically, the startups who are incorporated before 1st April 2030, they will continue to get benefit under this section. So combined, if we see that, the government focus has been to encourage the startup ecosystem and provide more and more avenues to them, more and more benefits to them, so that they prevail in the business ecosystem of Indian economy.
Correct, correct. And coming to the gig economy workers, the budget has proposed measures to formalize them, enhancing their access
Yeah.
to maybe healthcare and welfare initiatives.
Yeah.
How significant is this move for the gig workforce, and what challenges might arise in its implementation?
So obviously, government or finance minister did announce that, gig workers of online platforms, they provide great dynamism to the new age services economy. And because of their contribution to the economy, the government will kind of arrange for their identity cards and the registration on the eShram portal. And they will also provide, healthcare benefits under PM Jan Arogya Yojana. And this is likely to benefit 1 crore gig workers. So what it will do is, it will encourage, more and more people to join gig economy and gig workforce, because these formal channels will allow these gig workers to benefit out of various government schemes. Now initially there may be some implementation challenges in identifying or creating genuine records for such professionals, but I believe that this step is in right direction. And moreover, as more and more people formally come or become part of the government initiatives and government schemes, it also helps the government to expand its tax coverage and bring more and more people under tax umbrella. And in a way, they can contribute to the government revenues in the form of taxation. So that leads to formalization of the economy in a way. So I think these steps are again in the very right direction by the government.
Correct. That's quite insightful. So, in her budget speech, Finance Minister introduced several measures aimed at senior citizens.
Yeah.
So, what do you believe will be the potential implications of these changes on their financial plannings of the senior citizens?
Yeah. Essentially, if we see over last 2 3 years, the primary objective of the government has been to to simplify the tax structure. Now, specifically for senior citizens, government did increase the limit for TDS limit for interest from 50,000 to 1 lakh. Now, this will benefit lot of senior citizens who do not have to first take a TDS cut and then claim it back while they file their taxes. So these steps are in the right direction. Another change which was announced is that the annual limit of 2.4 lakh for TDS was increased to 6 lakh for the rental income. Obviously, a lot of senior citizens rely on rental income for their day-to-day income. And again, this increase in limit will help in their tax compliance and not bother about filing TDS or filing tax returns accordingly. So I think these small steps are getting together and helping the taxpayers in ease of compliance and ease of taxation. And by the way, government, the finance minister also announced that next week they will be introducing a new tax bill. So I think that also remains one of the important change in the Indian taxation system. Obviously, this will be a bill which will be presented in the parliament, and there will be some discussions around it. But the broad gist which we get from the finance minister's commentary and press release is that this is again aimed at simplifying the overall tax structure, both for the taxpayer as well as the tax administrator. So there is less compliance and less struggle for the both the payer as well as tax administrator. So I think these steps are in very right direction by the government.
That is true. I agree. And with that, we wrap today's episode. Thank you, Mr. Laxmikant, for sharing your valuable insights on the macroeconomic landscape and personal finance measures from this year's union budget. Your expertise will help us navigate these changes very effectively. And stay tuned for more insights and analysis. Until next time, thank you for watching and happy investing. So, thank you for your time. We really
Thank
appreciate
you.
it.
Thank you so much. Thanks for
Thank you.
having me.
Thank you.
Yeah.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.